what is the VA assumptions? And the things you don't know when you buy with VA loans in Hawaii.
Okay.
Yeah, so you were in military before and you have been selling real estate for quite a while. Can you share with us, what's the VA assumptions and what's the pros and cons?
So that's two categories here that I'll have to break it down. Let's just start off first with VA loans. So these are for eligible military buyers.
Yeah, active or not active.
Yeah, it depends. I mean, it can be retired military as well. So yeah, the VA loan, it's pretty easy to use as long as you got your good time in, you're eligible military or a military veteran. So I want to start off with, of course, the no down payment. That is fantastic. That's probably one of the biggest allures to people using a VA loan is they're not required a down payment. And also with the VA loan, when you're not putting down a down payment, you don't have to pay PMI or principal mortgage insurance. See, typically when you're getting, let's say a conventional loan, right, 30-year conventional, if you put down less than about 20%,
20%,
yeah,
penalized.
Then you got to pay what's called a PMI, principal mortgage insurance. So that increases the cost of your loan every month.
Yeah.
So that's the great thing about VA loan. If you put zero down, there's no PMI. Okay. And the next thing that I want to talk about is a lot of military does not know this, and this is a question that comes up. The house that you're purchasing with your VA loan must be your primary residence. So that's something to keep in mind. It's not for investment property or second home.
Right.
It's for your primary residence where you will be living.
Yeah, and you cannot use a VA loan to finance the Airbnb unit. Yeah.
That's very true, very true. And also, Elle, you deal with a lot of appraisers. VA tends to be a little more strict when it comes to the appraisal process too.
Yeah, VA appraisals are most strict the industry. Conventional FHA, USDA, they are much easier to work with. When it comes with a VA loan, VA appraisal, you have to be really careful, especially when you hire a real estate agent to purchase a home. Your real estate agent has to be very accommodating and very diligent.
And kind of aware of some of the things that they'll be looking at. Yeah.
And your real estate agent can do a lot of extra things to get you loan through. Now, there are a lot of things extra they can do. Also, the seller's agent is most important because seller's agents deal with the appraisals directly.
The appraiser, the buyer's agent doesn't deal with the appraiser.
Yeah, like I sold over 100 homes at VA Finance.
Yeah.
I would say very proud. Most of my listings, 99.9% the appraisals came out right.
Yeah.
And only one was a little bit difficult. Actually happened recently. What happened is the VA lender hired not just one appraiser, they hired two, which we never seen before.
Yeah.
They hired two VA appraisal, and one come of the price was right on the point, 1.1 million.
Yeah.
A second appraisal went to the same house, did the same thing. The appraisal was $30,000 less.
$30,000 less.
$30,000 less. So that was shocking. Guess which value did loan company go with?
They have to go with the smaller one.
Yeah, they go with the smaller one. So basically, they just shaved the price by $30,000.
Yeah. So at that point, when something like that happens, then possibly the buyer and seller can renegotiate on that. Technically, they could just cut it right there and decide to fall out of escrow. But usually, in our experience, the buyers and sellers will work to make it happen.
Yeah, because VA has no down payment. Usually, they cannot fund you the mortgage the amount you want. So usually, come by it and really go to the price, not like conventional.
Yeah.
People have. So that's the big thing.
Yeah.
Strict VA appraisal.
Yeah, but VA, they're great loans. We love them. We work with VA loans all the time.
Yeah.
There's a lot of good lenders here on island that work with that do VA loans, and
but they give you a lower interest rate.
Yeah, that's a major thing. So when you're using a VA loan, you get a lower interest rate than if you're using like a conventional 30-year mortgage. So that no down payment and lower interest rate, especially in times like right now when the rates tend to be higher, the VA loan is very, very nice to have. And I know for for me personally, as a real estate agent, when a buyer has a VA loan, I usually feel pretty confident that their loan's going to go through.
Yeah.
You know,
And for example, today's conventional 30-year fixed mortgage interest rate is 6.97%. Guess how much the VA interest rate?
I would say 6.3.
6.45.
6.45.
So that literally is a half point less.
And that comes out to a lot of money every month.
Yeah, half point less without 20% down payment. That's conventional. So that's a big benefit.
And okay, to touch on the last part of your question is VA assumables. We see a lot of properties right now where the seller has, when they purchase the home, they purchase it with the VA loan. Yeah. And now what they can do is they can actually transfer that loan to an eligible VA user. So the thing to keep in mind with that, VA assumption loans can be very nice because the allure to it is, you know, when they're advertising it, like Elle said, people that bought in like 2020, 2021, they got these interest rates at 2.5%. And if the assumable goes through and can transfer to you, that's what you as a buyer will be getting if you assume the loan, is the same interest rate, which that is the huge allure to it. Instead of paying 6.4 some percent like it is right now, you could be paying what they got it originally at. Now, one thing to keep in mind though is, let's say they purchased the home, they got their VA mortgage was $600,000. Right?
Yeah.
And now you're buying the home for, let's say, $900,000. There's a $300,000 difference in that.
Or like with last house we just sold a month ago. So the sale price is $1,070,000.
Yep.
And our seller, our client, has $680,000 mortgage at the 2.29% interest rate.
Yeah.
If you offer $1,070,000, there is a $382,000 gap.
Yeah. So that gap, you have to come up with that difference, and it is very, very difficult to come up with that difference unless you're using cash, because most mortgage companies, they don't want to do the second mortgage because they don't want to be second seat to that mortgage. When a bank or a mortgage company loans money, they want to have the first claim, the first seat on it.
Yeah.
So if there's a big gap to, you know, how much is owed as opposed to what you're purchasing it for, you might have to come up with a very significant amount of money. If there's not much difference at all, then it's perfect.
Yeah.
But there can be a very big gap, so that's why it's very important to know exactly what they owe left on that loan as compared to what you're purchasing the property for as well.
Yeah, like for that listing, $1,070,000, we got 3 offers. 2 of the 3 offers have contingency. In order to get $380,000 cash, they need to sell a house on the mainland. So because not a lot of people have $380,000 cash sitting in the bank to pay for the difference. Yes, you do have a very good advantage to get 2.29% interest rate, and your monthly payment for that house for $680 for $3,300 include escrow fees, home insurance. Yeah. But the catch is, because VA loan has no down payment, not a lot of people can afford the difference.
Yeah, so, and again, what I tell everybody is doing a VA assumable or, you know, any type of loan. First person, always check with number one person is your loan officer. They're the ones that have all the information and that can really steer you in the right direction. And, you know, maybe they can figure out some color for financing, like possibly using a HELOC to come up with the difference. Yeah. So you always first want to talk to your loan officer. Maybe they can come up with something really good for you there.
Yeah. So VA is very attractive financing because it's catering to our service member.
Yep.
And it's great. And government, you know, VA department is very good at, and they can do VA loan now 30 days now. No need to like wait for 45 days. Depends on how busy the market, everything.
Yeah. And another thing to keep in mind too is once you pay off your VA loan, you can use the VA loan again.
Yeah. Use the certificate again.
Yeah. Yeah. So what you need to get prior, what the loan officer is going to ask you for is your certificate of eligibility, and you get that from the VA. And yeah, once your loan is complete and you pay off all your loan, you can use the VA loan again.
You can use unlimited time, again, until it's all full.
Yeah, it's a wonderful benefit. And of course, our military men and women, they deserve it. They deserve to have a home. So it's great that they have, the VA loan available.
Yeah, it's good. So we highly suggest.
Yeah, if you can, that's the way to go. I hope this video was had some good information for you. If you have any more questions,
give us a call.
And please like and subscribe.
Yeah. See you next time.
Take care.